we don't want to be a downer. That inflation segment hopefully didn't get people in the down a bit.
I mean, I'm sure some people are down.
Yeah.
I think it was more just real.
Yeah.
And inflation is a problem.
Yeah.
It's a problem because A, the rates are going to stay higher for longer, and the cost of goods are going up faster than we want them to be going up.
Yeah. Yeah.
So those are the two problems.
Right. Right.
The one thing I will report is the markets, I think I'm not going to say it's an all-time high, but an all-time high this year, at least right now while we're recording this. It's Wednesday night, going into the weekend. And the markets are
the stock market.
Stock markets.
Yeah.
And usually the way it works is high markets, high rates. Low markets, low rates.
Right.
So would you rather have your investments be high or your rate be high?
Yeah.
People that don't have any investments want their rate to be low.
Right. Yeah.
Right?
Yeah, sure.
But I think a lot of people that are obviously have investments, they want their money to be growing as well. So it's a very hard balance.
Yeah.
It's very hard.
When it comes to net worth, some people, it depends who you talk to, put everything in there. If they got a classic car, if they have a guitar, if they've got TFSA,
Their home,
whatever, they throw that all in there as in net worth. And I've heard some people who are a little more picky when it comes to what should be in that basket. What's your takeaway on net worth?
For me personally, I put in every piece of real estate, including the primary residence.
Yeah.
TFSAs, RRSPs, even a locked-in RRSP I'll put in. When people have life insurance, I'll put it in for a value of $1, even if there is a cash surrender value, because that's not readily being able to be liquid.
Yeah.
The things that I leave out are ESPs.
Yeah.
So anything that's involved with the kids, I leave that out.
Yeah.
And household goods, that's not easily changed to cash either.
Sure. Yeah.
You know, you can have a classic guitar, for example.
Yeah.
That might be worth a lot of money,
Yeah.
but you can't change that into cash quick. A vehicle, you can usually change it quicker,
Yeah.
right? If you have a classic car, great. But what's a real market value? Sometimes the sentimental value is higher than what it could realize in the marketplace.
Right. What about a new vehicle or a newer vehicle that's 5 or 6 years old that's paid off?
Great, put it in.
Yeah.
I think even if there's a vehicle with a lien, as long as the title of that car is in your name,
Yeah.
put it in as an asset.
Yeah. Sure.
Because that helps offset the liability.
Yeah.
The one thing that we don't put in is we don't put lease vehicles in because you don't own that vehicle.
Right.
That's really just a straight up liability.
Yeah. All right. Let's talk refinance.
Let's talk about refinance.
Yeah. When is a good time? When do you get somebody in front of you and the light bulb goes off and you say, this is the prime person that should be refinancing?
A lot of refis happen at renewal. I'm going to preface this and say not all refinances happen at renewal. So the right time to refinance is the right time for you. That's really the big, gist of it all. People refinance to a maximum of 80% of the market value of their home. What is the market value? It's whatever the appraisal is going to be. How does an appraisal work? Well, an appraisal is based on your home, square footage, age, finishes, et cetera, compared to what has sold recently in your neighborhood for similar types of homes.
Yeah.
Okay? We can go to a maximum of 80%. So we have that 80%. Let's just say for argument's sake, the value of the home is $500,000. That means that you can have a global limit of your product up to $400,000. From that, we could splice that maybe into a mortgage, into a home equity line, however you want to have it set up. And then we have to pay out whatever is currently owing on your home, anything that's secured. Okay. So that's how you can do it as a maximum. The reason somebody would refinance would be to clean up debt, potentially, improve their property, do investments, buy a secondary home. I've had people refinance to pull equity out to give it as a gift to their kids so they can buy a home, pay for education. There's a variety of reasons why people refinance. But I think there's a misconception. They don't understand how does that 80% work. Well, it's 80% of my equity. No, it's 80% of the market value of the home less how much you owe. That's how much you can actually have access to.
Yeah. And anytime you can get high interest debt under control, right? Like
the debt's the debt, Todd.
Yeah.
And people are like, well, I'm refinancing. I'm just extending my mortgage. I'm just paying all the interest at the beginning. It's all based on the amortization. If you take a 30-year amortization, you're paying a lot of interest. If you take a 15-year amortization, You're paying a lot less interest and paying a lot more principal.
Right.
So it's all based on the amortization. It has nothing to do with when your term starts, when your term doesn't start. It's all based on what the amortization is of your mortgage. And that's one of the number one misconceptions. Well, every time that I refinance, I'm just paying all the interest at the beginning, starting the interest all over again. Well, you're probably doing a 30-year amortization every time. And you might have to do that just to get approved.
Yeah. Yeah.
Based on the amount of debt you have, based on the amount of income you have, maybe that's the best strategy for you is to do a 30-year am. I personally don't do a ton of 30s.
Yeah.
I do a 30-year am for people that want a 30-year am or need a 30-year am. That's not my default. My default would be 25 years.
Right.
That's where I start everything.
Yeah.
25-year amortization. I love an accelerated biweekly payment, especially if you're paid biweekly, because then you're really down to 21 years.
Right.
I do all these little tricks to try to get people to pay their mortgages
4 years,
down.
accelerated by, we'll take off
You're
25.
making 26 biweekly payments throughout a year,
That makes sense.
which equals 13 monthly payments. You're basically paying one extra month every year when you do accelerated biweekly.
Yeah. And why wouldn't you, right? If you're paid, obviously biweekly.
Make it automatic, Todd.
Yeah.
Just like when you're saving and doing investments, make it automatic. Set up a pre-authorized payment. Set it up on payday. You'll never miss that money.
Right, right. And of course, look, people need to be working. You have to have your finance. You have to have good credit in order to do this. So there are times when perhaps somebody might say, you know what, I just changed jobs, or my credit's taking a hit, or whatever. It might not be ideal time for.
Or sometimes when we do it, we say, hey, client, we have to do a B lender or an alternative lender for a year.
Yeah.
Get your situation cleaned up and get you back into a prime lender. Majority of the mortgages that we're doing, though, the bulk, are with bank lenders. And bank lenders, you would know, like TD, Scotiabank, Bank of Montreal. We're dealing with these lenders every single day. Every day.
Mm-hmm.
And I think there's a perception like when you go to a mortgage broker, you're dealing with a B lender, or you're dealing with a trust company or a credit union. That's not always the case. We want to provide the best solution to each customer. And sometimes that's a bank lender, and sometimes it's not. It's all based on what somebody's situation is, based on their income, their assets, and their credit.
Will the current lender you have oftentimes just assume or hope that you're just going to renew on, and that probably...
The bulk of borrowers do, Todd.
Yeah, that's right.
Sometimes at their detriment.
Yeah.
You know, people renew, and I talked to a couple today. They did the renewal in June. I'm like, why do you want to refinance in August?
Mm-hmm.
You messed up.
Yeah.
Something changed with your situation. But guess what? Something did change with their situation. I said, okay, guys, let's make a really good plan. And we're making a plan together. They may still go back to their existing lender.
Right.
And they may be listening to our show right now because I said, okay, we'll give you a shout out on the radio.
Yeah.
They may go back to their existing lender, but it might not make sense for them to go back to their existing lender. Like maybe they need to do a longer amortization. Maybe they have to pull equity out. So we're looking at all that situation. And once I get the documents in, I'm going to give them that feedback. I don't want to do a mortgage for mortgage sake. I want this business to be sustainable. And that's what I've done. Mm-hmm. If I just did every mortgage just for doing it, I don't think we'd be up to $2 billion. You know what I mean? I don't think we would be there because we wouldn't be having the repeat. This year, believe it or not, 85% of the transactions that I've done year to date, existing clients.
Wow.
Myself.
Yeah.
As a brokerage, we're at about 60%. 60% is still a huge number. Mm-hmm. In other markets, oftentimes mortgage brokers do one transaction for a customer and never talk to that customer again. Believe it or not.
Yeah.
I think the relationship business has worked for us. And, I'm pretty proud of it.
So if the bank or the lender that your existing lender wants to, or they send you something in the mail, I'm assuming, and if you don't reply to or respond to that, does it automatically renew?
Not always. Here's the catch-up.
Okay.
Here's the gotcha.
Yeah.
Some will auto-renew you into a closed, which that kind of sucks because sometimes it's a 6 months close and sometimes that's at a really high rate. So you really messed up. Some lenders will actually default your mortgage if you don't do anything.
Wow.
Like if you don't renew it, you're just like, then they can foreclose on you.
Wow.
That's
wow.
Great. But here's the thing. We try to get a hold of people. The lender tries to get a hold of people. But sometimes people just ostrich and they put their head in the sand.
Yeah. Yeah, that must happen, eh? I would dare say.
I think there's mental health. I think there's anxiety. I think there's financial issues. And it's tough.
Yeah.
You'd be shocked, though, the amount of people that change their email and change their telephone number within 5 years. It would shock you.
Is that right?
And we are good. We get cell phone numbers, we get home numbers, we get work numbers, we get emails. I'll send a freaking carrier pigeon to your home. But believe it or not, people change their contact information.
Yeah.
And we stay in touch.
Yeah.
As you know, like we mail stuff out.
Yeah, you do.
We
yeah.
mail stuff out. We send emails. We send SMS. Like we are staying in touch with our people.
Yeah.
But still, somehow people change their information and we do not find it out.
Well. So obviously, if people want to refinance,
Yes.
when we talked about earlier engineers,
And we kind of talked about like at renewal.
right, and the type of people that are good at this type of thing.
Mm-hmm.
Get your documents in a row. Get your tax information. Get your income. Get all that stuff, and get it ready for you. Right?
Yeah.
Be proactive.
For sure. We're dealing with a lot of teachers right now. You want to know why? Because they were off in July and August, and it's a great time for them to do transactions. So we're dealing with a ton of teachers. And, I love it. And they have very good, stable jobs typically. Even if they are subbing, they, have a good 2-year average.
Yeah.
These are pretty easy transactions to do. And I love dealing with teachers in the summer because guess what? They are free, footloose and fancy free. They just can run their stuff right over to my office, which we love.
Right.
A little bit more challenging once September hits, but just like anything, it'll be busy for a lot of people.
That's right. So when people are refinancing, that's a good time to do some renovations as well, right?
It's a great time to do renovations, and not everyone, Todd, does a refinance at renewal.
Mm-hmm.
That's reality. Some people do refinances midterm. The reason usually is they have to do a refinance for one reason or another.
Mm-hmm.
People probably midterm are not giving up their 2% mortgage to go into a 4% mortgage. Probably not happening unless they need to. Unless they need to pay out debt, unless they need to do a spousal buyout, unless they need to do a renovation. But people's situation changes, and that's why I think we need to change this narrative to say we can't break our mortgage early. Sometimes it makes sense to break it early to put people in a better financial position.
Yeah. And sometimes people just have to.
It's hard. It's a hard pill to swallow.
And sometimes people just have to sell, right? That's the
sometimes they have
bottom
to sell, but let me tell you, it's a hard pill to swallow to go from 2% to 4%.
Yeah.
That is tough.
Yeah.
But it's the same thing when it comes up for renewal. Like I have so many borrowers where their mortgage is coming up for renewal, and we gave some really good rates 5 years ago, like sub 2%, right? And they're coming in, they're like, I think I'm just going to keep this term that I have now. I'm like, but that's not the way it works.
No.
Like this is going to end.
Yeah.
But the challenge is that with some lenders, if you renew, you basically give up your remaining term.
Yeah.
So this is why it's really good to have a relationship with a mortgage broker, because you can keep your old mortgage. We get an approval today, but we don't fund the new one until the existing one is up for renewal. So we can basically switch it over on the day that your old one matures. So you can get every single day out of that low rate.
Wow. Well, I mean, again, so there's so much to know about renewal. I mean, anything we missed that you'd like people to know about renewals?
Every lender is different.
Yeah.
And that's why I think it's really important to seek the advice of an unbiased mortgage professional and also decide who you're going to want to do business with. Don't be talking to multiple mortgage brokers, multiple banks. You're wasting your time and you're wasting our time. I'll be frank. Decide who you're going to do business with, decide who you're going to trust, and then trust them and take their advice. It's like going to a restaurant and be like, what are your top 2 things on the menu? And then ordering something else. Like, come on.
Right.
Unless, you don't think you're getting good advice.
Right.
I mean, that's okay.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.